All right, the latest inflation numbers for August just released this morning, and to help us make sense of it all, who do we turn to? CBS News business analyst Jill Schlesinger is joining us live this morning. Good morning, Jill. How you doing?
I'm doing well, thanks.
Well, we're not excited to talk about inflation this morning, but we have to because we have to know what's going on out there. So inflation, it looks like, moved in the wrong direction this summer. So what happened in August?
Well, we did get some sobering news. Prices up 3.7% from a year ago. That's the Consumer Price Index. That's the headline number. And that is an acceleration from July, mostly because of energy prices. Now, if you look at energy, crude oil jumped from about $70 in late June to a recent high of over $88 a barrel. That's what's driving a lot of the increase in inflation. When we pull out food and energy, the core inflation rate up by 4.3% in August, and that's actually a pretty good improvement. Last month in July, we had a 4.7% annual pace. So sort of a good news, bad news situation. Overall, a mixed bag from the CPI.
Okay, so let's talk about the job market, because earlier this month, a report showed that the job market is slowing down. So how does that affect inflation?
You know, it's a very funny thing. We forget that we actually can drive inflation higher and lower. So here's how this works. If you look at the labor market, if it's a hot labor market, tons of jobs being added, people quitting, big wage growth, we've got more money in our pocket, we buy stuff, prices go up. Now, the reverse is what we're hoping is happening right now. We've seen a deceleration of job growth. Voluntary job quits have now returned to pre-pandemic levels, and wage growth is starting to ease. So remember, as our pay moderates, then we see prices at the core level come down. So we just want to make sure our pay stays ahead of the inflation rate. That's the big issue for 2023.
And just yesterday, we were talking here on QC Morning about buying a home, and we couldn't ignore the fact that the interest rate is still so high. Federal Reserve has been using those interest rate hikes to ease inflation. They get another meeting next week. So what are you expecting is going to come out of that?
I don't think the Fed's going to do much. I know that we've seen very ambitious Fed officials out there saying, gosh, you know, inflation still remains high, and it is high. But we're at this range of 5.25% to 5.5% in the Fed funds rate. It's a 22-year high. But if you look at a lot of the speeches the Fed officials have made recently, it now seems more likely that they're going to basically do nothing next week because the economy is still absorbing these 22-year highs in interest rates. I don't think that the mortgage interest rates are coming down anytime soon. That has a lot to do with the market itself for mortgage rates versus the short-term lending. But I think that we are going to start to see some relief towards the end of this year.
It's so hard sometimes for us to understand and talk about these numbers, Jill, but you make it sound so much more manageable, and we appreciate it. We'll see you next week. And of course, you can catch Jill regularly on CBS Mornings and the CBS Evening News with Norah O'Donnell, as well as every week here on QC Morning. We'll see you, Jill. Thank you.